Hi there, welcome to Grain TV. It is Monday, February 13th, and a mixed day in the markets. Let's take a look at GrainEdge's trading platform and see where we closed. In Chicago, corn managing a 3/4 cent advance, with new crop corn hitting the $4 mark for the first time since late June of 2016. So that was certainly good news. On the soybean front, we did lose 3.5 cents. We were positive going into the last 10 or 15 minutes of trade, but the market sort of fell out of bed at the end, and wheat in Chicago managed a 2.25 cent advance. There was really no major news to gravitate to today. There's just some lingering trends. Let's start first of all with the flash sales announcements from USDA. Yet again, another deal for corn, this time 101,000 metric tons to unknown destinations. That sort of has been the prevailing theme. We continue to get these, pretty semi-regular flash sales announcements on corn. They're nothing earth-shattering, usually around 100,000 metric tons. So they sort of keep the market sort of grinding higher. The other news that is sort of getting some more attention is the weather situation. Let's start first with the Southern Plains, where they saw astronomically high temperatures for this time of year. Altus, Oklahoma, my home state of Oklahoma, hit a 96 degree mark over the weekend, and northern Texas also seen mid to upper 90s as well. So that has traders thinking that we will see the winter wheat crop start to break dormancy a lot earlier than normal, probably 3 to 4 weeks earlier than normal, which means that moisture in the coming weeks will be exceptionally important. And right now, the outlook is for very little rain. There is some chance in central Oklahoma they might see a little bit of a drink, but it's nothing that's going to really change the prevailing drought. So that's getting a little bit of buying interest in wheat. In addition, in India, the situation there is continuing to be dry, especially in the heart of the wheat production area in the central part of India. It continues to be dry. The northern part is getting a little bit of rain, but overall it continues to be dry. Keep in mind, USDA did really reduce the wheat crop estimate in last week's supply and demand report out of India. So that is certainly supportive, and has the potential to lead to more exports in the U.S. Speaking of exports, this morning we had export inspections from USDA. These were not terribly different than expectations, although corn did do better than expectations, coming in at 1.255 million metric tons with a range of 900 to 1100 expected. On beans, we were sort of down at the low end, 1145 versus 1100 to 1300 expected, and wheat coming in at 307. So nothing really driving the market here on these news items here, but overall I think there's sort of this prevailing view that corn and wheat will continue to grind higher. Beans, on the other hand, continues to sort of have this seesaw battle between strong demand out of China and the prevailing expectations of a big crop in South America that will be hitting the market pretty forcefully in the near term. So that really has gotten the soybean market unclear where to go above 1060 on March, and today we saw, like I said, the sell-off at the end. Let's switch gears and talk about East corn. Like I said, it was a bright light day, if you will, that we did get, at least for a moment, above $4. I'm not sure the settlement price will be above $4 because we sort of faded down to $3.99 at the end, but certainly we traded for a brief moment above $4. And again, you have to go back to late June of 2016, the last time the D17 contract has been this high. And it's been a long, slow grind higher. Obviously demand side is part of this equation, that we're seeing better demand coming down the pipe with better exports, the potential for more ethanol being produced than what we thought going into the marketing year. And then of course the other wild card will be acreage from the U.S. farmers this coming spring. We won't really get a full indication of that until the March 31st planting report from USDA. But right now I think there's enough concern about a drop in acreage that we're starting to see some sort of interest in lifting the new crop premium here for 2017 delivery. So if we're looking at sort of temporary highs here, I wouldn't be surprised to see us make a move up to the 405 3/4 range. That was sort of a key reversal day back in the summer of 2016, we might have a chance of getting up there, but I'm not sure this market has to run away at this juncture. We still have massive amounts of stocks in the U.S. We're going to face exceptional competition this coming next few months as Argentina and Brazil reboot their corn crop and start to hit the market. So, look temporarily for pulling the trigger on some of your new crop sales. I certainly think if $4 is the worst you do this year, that would be a great thing. So as always, if you'd like to learn more about how we can help you, including our morning technical alerts, our morning commentary, our cash bids from over 4,000 elevators, all for the low cost of only $7 a trade, by all means, visit us online at greenhedge.com, sign up for a free demo, and take a look at us. Have a great day. We'll talk to you on Tuesday.